Hello and welcome. You are watching Business Plus here on News9 Live. I'm Krishna Kumar and we begin with a big story that we're tracking and analyzing and discussing. And yet again, it is Mr. Narayana Murthy who has sparked a controversy. After advocating for a 70-hour work week for young Indians, Mr. Narayana Murthy, the iconic founder of Infosys, while having a conversation with the co-founder of Zerodha, Mr. Nikhil Kamath, at the Bengaluru Tech Summit, Mr. Narayana Murthy, in that conversation, has advocated for 3 shifts a day, especially for workers in India's construction and infrastructure industry. That's what Mr. Narayana Murthy has spoken of, as if there wasn't enough debate about the 70-hour work week, which technically still continues. We're yet to be done with the 70-hour work week debate. And then comes these comments on 3 shifts a day. And the social media reactions really tell you the situation. The first reactions were, yes, give us 3 times the salary. We will do 3 shifts a day. But Karthik, really, 3 shifts a day?
Krishna, I think Mr. Murthy is living in that oops, I did it again moment. But I'm not sure if he has really, spoken accurately what he really wanted to, what was really running in his mind. To my mind, I think Mr. Murthy should have meant, if not would have meant, he should have meant that infrastructure sector needs to work 3 shifts a day. Not each employee in the construction business should be working 3 days a week, 3 shifts a day. So I think Mr. Murthy is suggesting that just constructing India's large infrastructure projects in 1 8-hour shift in a day is not going to cut it. So primarily rotate people, get them in shifts, add more manpower to every project. Now, I think there are more questions that arise with that how do companies afford more people, and how do you get more people on your payrolls, or even if these are daily wage earners, how do you get your employee cost to go up 3 times? But the point really being that even a project which is supposed to run, let's say, 3 years can be completed in 1 year if you triple the amount of manpower that goes into it. So the cost is actually going to be pretty much the same. I feel that is what Mr. Murthy should have or would have meant by his 3 shifts a day comment. But of course, social media being social media.
Would have, could have, should have was also mentioned during that entire 70-hour work week controversy that got sparked. And yet again, here we find ourselves now, less than a month from there. We have Mr. Dilip Sheran incidentally joining us on this broadcast. Dilip, great to have you here on the show. Simple question to you. Is this case of boomers versus zoomers going too far? Because one is to justify this logic of wanting to have greater productivity. I don't think that is lost on any of us. But the question again always is, does productivity always get measured in terms of number of shifts and number of hours that one puts in?
There's one school of thought which says that Narayana Murthy in the colloquial of India, Satya Gaya. But I think that there's a deep point that he's trying to make. India's infrastructure projects are moving far too slowly. We have far too many regulations and controls as far as being able to work in a flexi time model is concerned. And by flexi time, I don't mean sitting 6 hours at home and working 2 hours in the office. I mean projects and industries which need to have so many permissions to actually function effectively on a 24-hour basis. Narayana Murthy is probably pointing at those. If that is what he meant, he's doing well. I don't think that he's that silly as to suggest that individuals should work for 3 shifts a day. That will just lower productivity. But the fact that there is a huge capital cost, because every infrastructure project you make in this country involves intensive capital expenditure. If that expenditure can be made to be fructifying into real assets much faster, then that would make a huge difference. Narayana Murthy's comments ought to be taken in the context that India is probably embarked on one of the most large investment projects in the world. I was recently in Abu Dhabi and I saw that major construction projects have permissions to go on for 24 hours. Now that makes a huge difference in countries which are trying to play catch up.
Okay. But then you obviously have environmental concerns, pollution concerns. If construction goes on 24 hours a day, we are in pollution
concerns.
Sound concerns, there's enough and more. Okay, I'm going to bring this back to this entire working, because if you see the reactions on social media, Dilip, it's all about young people asking the older people questions on why do you have to judge us now in terms of how much work we put in. I have a counter question. A lot of questions are raised on what is the starter's salary. Why hasn't that changed in 2 decades at Infosys? And think about it, 2 decades ago, 3 decades ago, somebody starting off small can have hopes of buying a house very quickly. Imagine somebody who's 20-something right now, starting off with a salary, questions being raised on their knowledge and productivity, etc., and they have absolutely no hope of owning anything, especially a house. Because some of the simplest milestones that were available to Mr. Narayana Murthy's generation and the nearby generations are not available to the current Gen Z, and including mine on millennials to Gen Zs. Isn't it, Mr. Cherian?
That is a huge problem. That is a global problem, in fact. Most estimates across the world suggest that as far as Gen Z is concerned, and a couple of previous generations, they're going to find it harder and harder to be able to acquire the assets that previous generations had. And yet, there is no getting away from the fact that these generations are working on the backs of the benefits that their parents and previous generations had earned. So you will find that while ambitions and hopes remain high, costs have gone through the roof, and unfortunately, the brutal law of corporate existence is that you will pay what you need to pay and not pay what others want you to pay. Now, if
you just reverse that, Mr. Cherian. Sorry, before you go ahead, you just reverse it for a second. I know you're making a very good point. The Gen Zs are saying we will work as much as we need to work and not a second more. This is the response that will come.
You are right. And in fact, that is a problem that corporate India is facing today. We need to recognize that Gen Z doesn't feel the need to work that long. Gen Z doesn't have the same commodity and product aspirations that others have. They're quite happy living in Airbnbs or versions of that. And the shared economy is coming out as a result of this as a in a sense, inevitable kind of social change, and that may change the way corporates have to deal with today's generation of workers. Yes, there's going to be a problem, and the answer is that we don't have the answers yet.
Mr. Cherian, if I can step into this conversation and bring it back perhaps to infrastructure, and that is the core sector this time, attracting the ire of Mr. Narayana Murthy.
Fair enough. In fact, I thought this entire thing began with Mr. Narayana Murthy's own concerns about Bengaluru, and the Bengaluru metro, and look where it led up to.
So my point being, Mr. Cherian, that every now and then there are these big ticket projects that get sanctioned, that get action, and there is always a contract and there is always a timeline. I think flexibility of timelines is actually the bigger problem than infrastructure companies, construction companies getting people to work overtime or undertime. And there are some projects that are in fact getting completed in record time.
Yes.
The Noida airport being one. I mean, hopefully it does kick off in 2024, early 2025, whatever the deadline is. But look at, talking about Delhi NCR, look at the Ashram flyover, 3 months flat. This wasn't the pace of construction, the rate at which large infrastructure projects were built. Even the highways, even the expressways that we are seeing flourish in this country right now are actually being built in record time. The problem, I feel, is limited to certain states, certain specific projects within states. And Bengaluru traffic, we all know. How do you stall traffic in a city as crowded as Bengaluru for 24 hours a day?
Brought it back.
Obviously, your construction will have to happen in the wee hours of the night when the traffic situation can be managed to build those roads.
Oh, Karthik, you just brought it back to something even more basic than the frustration of not watching the Bengaluru metro rail project being completed on time, is the fact that both Mr. Narayana Murthy and Mr. Kamath, who he was in conversation with, had to fight great traffic to get to this Bengaluru Tech Summit in the first place, Mr. Cherian. The problem begins there.
And they're not the only ones. Remember what happened with Trevor Noah when he was visiting Bangalore?
Yeah.
And the people who were there to attend that particular event did not make it. I mean, the event did not happen for a different reason altogether. But infrastructure, of course, is a much larger challenge, and infrastructure construction building is a much larger challenge than just working 3 hours, 3 shifts in a day.
Right, Mr. Jarian, I'm guessing it all began, thoughts would begin when you're stuck in that Bengaluru traffic, which has become infamous across the country, Bengaluru traffic per se. But then again, it is all about those crucial projects which can ease these concerns and the pace at which those crucial infrastructure projects are being completed.
How many of you haven't watched a construction project which moves at a snail's pace? I have passed by numerous ones where you find 2 people working on a construction site. It just boggles the mind. What are the others doing? And why isn't more work going on in different stretches, aside from, of course, the time taken to cure cement?
But
having
Mr.
said
Cherian,
that,
isn't that actually a problem of contracting, of putting enough penalties in place? And does the onus for infrastructure companies, construction companies to not complete projects in time actually lie even with governments, both state and central governments? You've got to tighten the screws to get them to deliver. And only once you tighten those screws will they actually find it viable to increase the number of shifts and the number of people working in each shift.
You've got to tighten the screws. You've got to think outside the box, and you've got to come up with solutions which are part of what makes India great. As far as Bangalore traffic is concerned, it is now not just a national shame, but global companies are now worrying about whether they can continue to be located in Bangalore because of the sheer downtime involved in any set of meetings that they want to get past during the course of a day. It's impossible to do 3 meetings if you have to do three parts of the city. Not possible.
Right. My only solution would be that, as somebody from born and raised in Chennai, just move some of that stuff to Chennai. Much better traffic as compared to Bengaluru, a big city, one of the oldest metropolitan cities in this country. I think it's all about diversifying even within the south. You've seen the way Hyderabad is coming up, the way Kochi is coming up. So solutions will lie in not overcrowding Bengaluru, both in terms of immigration and in terms of the amount of work. Software exports, 30% of software exports coming in from Bengaluru, as Mr. Narayana Murthy is talking about. But Shirin, this has been a fascinating conversation with you. I'm guessing this conversation is now going to end over here as far as work weeks and Gen Z work culture is concerned. We will continue having that conversation and more with you. But for now, we'll let go of you. Thank you so much for being with us here on Business Plus on News9 Live. Right, and with that, we move on to the other big story that we are, putting the lens on, and that has to do with the startups in India and some of the up valuations and down valuations that they are witnessing, especially when it comes to a very famous global investor, Prosus from the Netherlands. This Dutch investor has come back into the news again for devaluing Byju's, once upon a time a decacorn, above $20 billion worth of valuation, $22 billion worth of valuation, now down to just $3 billion. Can you believe that? But then again, that story doesn't stay the same. With Byju's and the edtech sector going through some really trying times, you have somebody else, a B2B e-commerce company like Meesho, where the valuations have gone up, whereas Prosus has managed to hold on to the same valuation when it comes to its investments in companies like Swiggy as well. But let's understand how this works from the point of view of one foreign investor into startups across the board, across sectors, across verticals here in India. Karthik, simple question. Byju's is a known story. I mean, the story has been going in one direction for the last 6 months. Yes, there's a new milestone. There's a new milestone of the wrong kind that it has hit. But the fact of the matter is that it's a mixed bag. Startups in this country, which were once upon a time the big headliners, have been through their own course. Some have emerged stronger, while some others haven't.
Absolutely, Krishna. And I think, it's important to understand that there is a difference between a markdown in valuation and a down round in investing, which means that on its own books, what is a markdown? A markdown is on its own books. Prosus, and Prosus, of course, is a renowned, celebrated investor and has its fingers pretty much in every startup sector within the country.
Right.
Now, Prosus, on its own books, has marked down the valuation of 2 companies, and incidentally, Byju's is not the biggest loser.
Right.
I think in terms of percentage over the 3 rounds of slashing valuation, Byju's has hit the worst. But Byju's is not the only one. PharmEasy, in fact, has returned the lowest IRR, or internal rate of return, to Prosus, the investor. Having said that, the difference between this markdown and a down round is that none of these companies have actually thus far gone for a down round. In a down round, you actually raise capital at a reduced valuation. So this is just a markdown on the books of Prosus. However, if any of these companies were to now go to the market and raise value, especially the ones who are marked down, this would be treated as a benchmark and they would have to shed more equity to raise the same amount of capital as they would have if their valuation was not marked down.
Fair enough.
Now,
before we go any further, Karthik, so let's try to make this even more simple for people understanding. When you say valuations have been marked down, valuations have been reduced, that essentially tells you the actual worth of the company.
Yes.
Right? So Byju's worth, which we thought as as watchers, once upon a time it was worth $22 billion, a double-decker con.
That's right.
In that sense, not a single-decker con, but a
yeah,
double-decker con.
Yeah.
But today is $3 billion. You have companies which are, which haven't made a peep as compared to Byju's, who are valued double, triple that of Byju's.
Absolutely. But again, coming back, I think the last valuation that we saw of Byju's at $22.5 billion was in July 2022. That was the value at which it did the fundraise. So it actually got money at a valuation of $22.5 billion, and hence all its investors would have marked up their values in their books to a figure of 22.5. Right. It's not necessarily Prosus that would have invested in Byju's at that valuation, but as an asset lying on the books of any of the investors, it would have been a markup. Now, investors like Prosus, including Prosus, are believing that the real value of Byju's is possibly just a fraction of that, and Prosus has done it for the third time. It brought down the valuation. The first time it slashed it down to about 5.9 billion, followed by about 5.1 billion, and now it's down to a trickle just about 3 billion or so. But like we said, Byju's is not alone, and let's look at some of the portfolio companies of
Byju's is not the best story to talk about when it comes to Prosus's India portfolio, Prosus's India report card. Companies like Meesho, a B2B e-commerce company, which has been a stellar performer, 40+% IRR.
32% if I'm not mistaken in the case of Meesho.
Another 30% is PayU India, the payment gateway as well. These two have been stars, whereas Swiggy, the food delivery business, the quick commerce business under so much fire, still managing to be in the green in the Prosus portfolio.
Absolutely. So Swiggy continues to be in the green. Meesho, like you mentioned, PayU, as you mentioned, have been the top performers in the startup report card of Prosus. And I think, again, there are these matrices that Prosus, like every other investor, looks at. What are these matrices? Number one, is there a clearer path to profitability? Is there some very obvious signal of exponential growth in revenues or exponential narrowing of losses? That seems to be the case in the case of Meesho, in the case of PayU, and in the case of Swiggy. In the case of Swiggy, the path to profitability has now been shortened because of the narrowing of losses coupled with growth in revenues. Even in the case of Meesho, and incidentally both Meesho and Swiggy have already been written down. There has already been by Prosus itself in the month of June or July this year. Prosus had in fact marked down both Swiggy and Meesho, but the fact that it is keeping it constant right now, not marking it down, in line with the markdowns that we have seen in PharmEasy as well as Byju's, it definitely finds itself in a more comfortable zone, if not a completely overvalued or safer zone. It is in a more comfortable zone.
And incidentally, apart from all these big names, I was just checking out companies like Eruditus, Executive
Education. Which is also an edtech company. So,
an edtech company doing well in this portfolio.
You would want to find a pattern that, hey, edtech, PharmEasy, online pharma, COVID spurt, obviously not as lucrative as it was. But of course, there are other edtech companies as well. However, the difference between Eruditus and Byju's being the fact that the former is actually into executive education, is not really looking at the K-12 model, is not really looking at extra
high-value
classes,
customers.
High-value customers who are looking at upskilling, who are looking at reskilling, and these are courses affiliated to the best universities globally. You get a certification course and you happen to do that course online. So you can't really try and draw a pattern here specifically that, hey, all food tech is doing well, perhaps not, or all edtech is not doing well, perhaps not. So I think it's a company-to-company analysis that has been done by Prosus.
Right, and like Meesho, which is essentially a B2B company, which means none of us consumers come into contact with the companies like Elastic Run are also doing really well in Prosus portfolio.
Again, linked to the e-commerce space, and then you can obviously draw some sort of inference that e-commerce traffic, footfalls, clicks are of course always on a constant high, on a constant rise because of internet penetration, cheap data, more people getting easier access to smartphones, etc. So overall there is this e-commerce story which is still perhaps not at a stage where its valuation is overinflated and it's a bubble that could burst.
Probably the big hope going forward amidst so much uncertainty. But we will move on away from Prosus India report card to your own. It's something to do with you. It's time now to track some crucial financial deadlines that need to be met by those of you who are watching strictly by the end of the year in the month of December 2023. Number one, mutual fund holders and equity investors. Listening to this, you are required to either provide nominee details or give an opt-out confirmation before the 31st of December. That's number one. Number two, individuals possessing bank lockers, they need to sign and submit a revised locker agreement to the respective banks in which they have those lockers. That's number two. Number three, for those individuals who have not updated their Aadhaar information in the past 10 years, they need to do it by the 14th of December. The deadline to update Aadhaar for free of cost is 14th of December. Number four, the investors in stocks and stock markets through demat accounts, they are required to make nominations or opt out by the end of this year, 31st December. If investors breach the deadline of December 31st, it will result in the freezing of their trade and demat accounts, so be very careful with that one. Number five, individuals are required to pay a third of advance tax installment in the month of December. Plus, if you have not yet filed your returns by the original deadline of 31st July 2023, you need to file your revised or belated returns in the month of December itself. So those are the top 5 to-do things before the year rounds out, and we are giving that to you on the last day of the month of November. We begin the month of December tomorrow. So here's wishing you, all of you watching, all the best when it comes to completing your section of the to-do list. And with that, we've completely run out of time here on this edition of Business Plus. Karthik, thank you so much for being with us. And with this wrap here from my side, this is Krishna Kumar signing off. Keep it with Business Plus. Exit poll results coming up next.
गहलोत जी कौनी मिले वोट जी
गाली भड़काने वाली स्पीच हो रही है।
केसीआर की आदत झूठे वायदे करके उन्हें तोड़ देने की है।
केसीआर